I would like to welcome everyone this evening. My name is Keishana Myrie-Smith, and I am the founder and CEO of Tax and Business Advisors. We provide accounting and tax solutions to nonprofits, which allow them to thrive and focus on their mission and impact while we help them with their accounting. Today, we'll be talking about demystifying your nonprofit's tax exemptions, what every grant-funded nonprofit needs to know. And what we'll be doing today is we'll be diving into some common areas of confusion, which is nonprofit tax-exempt status. We'll talk about what that is and what it isn't, and how to stay in good standing related to your tax-exempt status. Because the truth is that misunderstanding your tax status can cost you big for your organization, especially if your nonprofit receives any sort of grant funding or is applying for new grant funding. Your compliance could be at risk, and it plays a huge role in your funder's decision-making process. So staying compliant can just essentially help your organization protect your reputation, as well as protect any sort of future resources that you hope to get for your organization. So I'll start off with just talking about what the 501c3 myth is. So one of the biggest misconceptions that I sometimes hear is, we're a 501c3, so we're exempt from all taxes. But that's not really true, not always true. Being a 501c3 simply means that you're exempt from federal income taxes, and that's it. Each of those additional taxes have their own set of rules. So it doesn't automatically mean that you're off the hook for state taxes, sales taxes, payroll, or property tax, right? They have their own sets of rules, which often you'll have to file separately at the state level. So it's really important to understand exactly what your exemption covers and what it doesn't, so that you can avoid any sort of penalties or unpleasant surprises down the road, particularly at the state level. So what does tax exempt actually cover? Let's break it down. When you receive your IRS determination letter granting you your 501c3 status, it's only saying that you're exempt from federal income tax. But, for example, if your organization wants to be exempt from sales tax, like, for example, if you purchase supplies for a community event and you want to apply through your state's Department of Revenue to have it tax exempt, that's a separate process that you need to follow. And, the same thing goes for property tax. Some states will exempt you if you own a building and can provide they can allow you to use your charitable building for charitable purposes, right? Again, that's an additional application that needs to be submitted so that you are exempt from property tax for your organization. And the bottom line here is that you don't want to assume that you're automatically exempt from every form of tax. You always want to check at your state level for the requirements and follow through with any sort of applications that will allow you to have, for example, sales tax exemption or property tax exemption and things of that nature. The next slide talks about compliance is not equal to a one-time filing. So one thing to definitely keep in mind is that, getting that IRS determination approval letter does not mean that you're set for life. You have to continue staying in compliance on an ongoing basis. So every year, your nonprofit has to file a Form 990. There are shorter versions of the 990. There's a 990EZ and the 990N, depending on your revenue or the amount of gross receipts that your organization gets. And in addition, your state may require some other things like an annual charitable registration or renewals or other sorts of reports at the state level. So it's easy to sometimes overlook some of that stuff, but missing even one of these can put your organization at risk. And don't forget about transparency. You are required to publicly disclose your IRS letter and your most recent Form 990. And what this does is it really helps trust, build trust with your vendor, your funders, and your donors, and your community in general. So that's just something to keep in mind in terms of maintaining compliance for your organization. So some common missteps. Let's talk about what a few mistakes that sometimes I see or often see. The first is assuming your nonprofit is completely tax exempt, especially for grant funded money or when you're getting grant funded money or when grant funded money is involved. That assumption can lead to, unintentional misuse of funds or non-compliance at the state level. The second is ignoring your state level requirements. Just because you're federally compliant doesn't mean your state is satisfied. So you really want to make sure to be able to operate legally in one sense or another. You want to make sure that you have a sense of what your compliance needs are at the state level. And the third is mixing your revenue streams. If you're doing something like hosting events or running a side business or providing services for a fee, some of that income could be considered unrelated business income and or income that basically needs to be taxed. And it's really important to keep in mind that these things need to be tracked separately and reported correctly in order for your organization to remain in compliance. The next we'll talk about is what could jeopardize your status. The first one is if you're not filing, if you're missing any sort of filing. So again, kind of getting back to, there are several actions that could cause the IRS to revoke your tax-exempt status if you miss filings. One is private, benefit or enormment. So in other words, this means that board members, founders, or staff using your organization's resources for personal gain can jeopardize your organization's tax-exempt status. Even any sort of unintentional missteps can lead to red flags. So it's really important to make sure that the organization's resources are not used for, personal or private benefit or enormement for the board members, the founders, or the staff. Another issue is political activity. As a 501c3, you cannot participate in political campaigns, or, you can't even really have any major lobbying efforts. They have to be extremely limited. So that's another thing to keep in mind. But the biggest threat that could jeopardize your status is if failing to file your Form 990 for 3 consecutive years. That could result in automatic revocation of your tax-exempt status. And this can be a really serious event that is hard to recover from. And it can also make you ineligible for grants and donations until you're reinstated for your status. So it's really important to keep in mind the importance of timely filing the Form 990. And just a few best practices to stay compliant. So how do you avoid some of these pitfalls? It really comes down to putting strong systems in place. You want to start with detailed and real-time record keeping. You don't want to wait until tax time or audit season to organize your books. You want to track your restricted grants separately. If a funder gives you money, for example, for something like youth programs or a specific program, you need to make sure that it's not being used for administrative or fundraising efforts, and that it is really truly being used for what the funds are being provided to you with. You want to monitor your revenue sources. If you have more than a small portion of your income that comes from unrelated activities, the IRS may question your tax-exempt purpose. You also want to make sure that you're keeping documentation of all your board meetings, your decisions, and your policies. That governance trail is really important to running your organization in a professional and transparent manner. And lastly, you may want to consider working with a professional. You don't have to figure it out alone. Someone like a CPA can help you. Some of the things that they can help with is they can help you with your tax setup, your IRS filings, and making sure that you are exempt at the state level. They can also ensure that your grant reporting lines are in alignment with what you need for your Form 990, as well as they can help you clean up any sort of historical issues or set up stronger accounting practices. And if you're preparing for an audit, They can help strategically, or even for a big grant. Just the key thing to remember is working with a CPA can be working with a strategic partner to get you to where you need to go from a strategic level for your organization. Okay. And just a few final thoughts. Tax exempt does not mean tax free, right? It means that you really need to be aware at the federal and the state level what you are exempt from doing. And if you at the state level require some sort of special filings, making sure that you're doing that. Staying informed at both the federal and the state level is, again, really very important. Also, the annual filings are not optional. Again, making sure that you're doing your 990s so that you don't jeopardize your organization. The next being grant compliance means tracking and transparency. You want to make sure that you're keeping an eye on how your grant dollars are being spent, particularly if they're restricted, right? You want to make sure that you're spending it for what it's intended. And you also want to make sure that your reporting matches across your system. So you want to make sure that your bookkeeping matches what you're doing for your tax filings, as well as any sort of reports for funders. All of those three mechanisms should be consistent with how you're reporting your grant spending. And lastly, working with a nonprofit focused CPA or professional. They can certainly help just ensure that you are, not only preparing your tax returns, but also just providing you guidance at a strategic level for what your organization needs.